boy, do we have some big data sets to look at today with the monthly CAT errors. But first things first, I want to say this is not financial advice, will never be financial advice. This is strictly opinion content. And in this video, if I'm talking about anything that is suspicious or whatever else, I am not accusing anyone of any foul play. So for anyone that doesn't know, the CAT system is called the Consolidated Audit Trail. It essentially tracks trading anomalies and equity and options errors across the market. So if they're late, if there's errors with those trades, if they're marked by a broker-dealer in an incorrect way, the CAT system will flag those trades. And let me know in the comments and replies below if you think the CAT system is a good idea to have for the SEC. Again, I don't know who would be opposed to this unless, of course, you might have something to hide. I see it just being a net positive for us to look at data to see, hey, when and where there are some instances of trade errors in the market. First things first, Friday, October 17th is OPEX. So an interesting day in the markets. Typically not a lot happens on OPEX. That is why I'm not really concerned about any price action specifically on GameStop or really the broader market for that point. But diving into the CAT report. Now, I said what the CAT system is. When you actually come through the data, there's some crazy numbers. The first one that popped out to me, and really the most notable of this entire report, and by the way, these reports are published every single month. So if you're looking for kind of market anomalies or areas of interest or specific time periods that have a lot of market errors that the CAT system flagged, these are a great place to find it. This is the most recent one. We have a date range here from September 26, 2025 to October 9 of 2025. Very odd. On October 1st, you had 1 billion 1.1, nearly 1.2 billion options errors. Now, this is specifically for options, so obviously options contracts are worth a lot more shares than just one. So that is a lot of errors. Now, in this particular instance, October 1st, was that a significant day in the market? I mean, hard to say. Now, I'm going to pull up a report here in a minute from someone named Region Formal on Reddit, who compares kind of GameStop specifically with CAT errors and CAT data and kind of the timing thereafter with settlement to see if there's any relation. And I'm not suggesting that there is. And I want to be clear that that is interesting to look at, but would still border on my opinion of being somewhat tinfoil. Now, for GameStop specifically, what happened on October 1? Well, it's an interesting date because on October 2, you had to own shares of GameStop to be eligible to receive the warrant dividend. The record date for that was October 3rd, but you had to buy shares on October 2nd to be eligible to be recorded. So October 1, very interesting. That would have been the day before needing to have GME shares. Could just be, like I said, a very strange coincidence, or could be something more. So that is particularly interesting, and I do want to look at SPY as well on October 1, just because I think in fairness, we don't want to make the total assumption that something bad happened, but you can see that SPY had a big update here. Nice price action, bullish engulfing candle from the previous day, and then kind of topped out. And October 1 was pretty much the last day upwards. So did they contain things from going too much higher? I don't know. Again, I'm not saying anyone is at fault here or committed something intentionally. But let's go to Region Formal's report. This is from August to September, and this just shows really that there are some anomalies here. Maybe some are related to GameStop, but if you're looking particularly at GME, and this is just data. So when I have people in my replies on X saying that, oh my gosh, this is, totally made up. It's like, I'm literally just saying what the data is. So this is, this is indisputable. And whether you think there's a connection or not is beside the point. This is literally just data. So I tell those people, don't get angry at the data. They still do and never learn. But moving on, this is the performance of GameStop from that theory that there might be a relation to GameStop. So this is the exact date of the errors. This is the amount of errors on shares. Now, I don't think this is an options one, so this is shares. In the CAT system, there are two different slides. One is for options errors. The other is for regular shares. So interesting delineation, but regardless, look at this performance. So this is all from C plus 35. That's calendar day plus 35. That is the settlement window where these errors have to be rectified from. You can see some upward price action. So dating back to 2022 when there were 2.6 billion errors, 97% peak performance from that date within C35. So that's very interesting, very telling. You can see some other big 40 percenters. That was in April of 2025. C35 later, 38% upward. Same thing in May, 33% upward. And then even in June, 6% upward, which was interesting because June on GameStop, if you remember, was the second bond offering. So very odd that you would see upward price action when GME was really just super slammed down dilution again type environment. So I definitely think that is at least noteworthy. Maybe it raises some eyebrows. But there's one here in particular, May 1st of 2024, with a 500% upside. You're going to say, how is that possible? Well, that's when Roaring Kitty came back. That's a whole nother topic for a whole nother day about what I think happened there. So that was the C plus 35. Now this is C plus 70, which I believe is the final closeout. That's 70 calendar days. As you can see, also some interesting data set here, 100% May 2022, right off those 2.6 billion errors, 85 billion, 70% in April of 2025. So everything is pointing up. There's not a minus on this entire chart. So that is very, very interesting. And again, I think that's the point of the video today, is that these things happen. Data set is there. The interpretation there, and shout out to Region Formal for this one in particular, is just that. It's just factual. It's the percentage that GameStop has ran when there are significant CAT errors. So now these are on options. We'll see if that has any difference, if it's different, if it's the same. But typically, and again, for this video, October 17th, the date I'm recording this, is an options expiry, OPEX. Typically, on those standard OPEXs, there's not a lot of price action because ending above max pain for any stock, let alone GameStop, over that, market makers are obviously delta hedging. They are buying shares. They don't want to do that delivery then, T+1 on the following Monday, creates significant upward pressure across the market. Specifically for GameStop, I believe, and let's see if it changed, that max pain was 24 for this week. I wouldn't have been surprised to see it come down to 23.50, but let's just confirm that on Chart Exchange. It did say at 24. So, to close above that, it's just not likely. And I'm not saying that to tell you where price is going. I could never do that, especially on a stock like GameStop. But I just wanted to highlight that because it's certainly indicative that this would not be the time that a market maker would kind of clear out any of these potential obligations or the CAT error type anomalies. I don't think it would be typically on an OPEX. That would just be me as a betting man. Otherwise, no clue. Lend pool wise, again, extremely, extremely unique and interesting behavior here. You can see the borrow fee jumped up again to 22%. This is a big rise from 17% to 22% in the span of 48 hours. And you can see the chart here. It's just going straight up. I wish that was more how the GameStop stock price chart looked, but it's not. However, this is extremely encouraging for me because it's obvious that they are using every tool in their book to short GME. Now, the last time that the borrow fee on GMEU, which is a main kind of suspicion point here that there's something going on with the ETF, don't want to really speculate too much as to what, but we can at least say it's interesting, the timing of it. The last time the borrow fee was that high was the bond offering. So again, a period of extreme shorting. Now, the difference now is that there really wasn't a lot of narrative here to slam this thing down. And you did have the mechanical filing of a Form S-3 by the company, which again said that there's two more instruments that they might use in the future for potential shelf offerings. Again, that is totally theoretical. That's really just maintenance by the company, covering all ground, covering all basis points there. So nothing to materially slam this thing down as far as they have. What do I think this means? Well, if you look at XRT again, the lend pool is kind of glitching out of control. The fee is bouncing up from 3 to 2 down to 2, back up to 2.5. The shares are all over the place. I think this is a lot of creation and redemption, and we'll have those numbers for today, tomorrow, if that makes sense. So let's pull up the chart here and see kind of where these ETFs are, what's going on in the creation redemption land. And again, it's one of those things where you look at this data, and I personally could never make a huge financial decision off of this data. And sorry that the sheet is slow to load. There's so much in here, and this is a published sheet now from someone on Reddit, so it's a little bit slower than usual. But yeah, you can see that ETF right here, this last column is XRT. 3.75 million outstanding, down to 3.6, down to 2.2. This is extreme lows on XRT, back up to almost 4 million as of October 16th. So that's why the lend pool is getting filled up. They are creating shares. Those shares are magically then going in the lend pool. They can pull out those shares to cover fails. This is kind of a snowball effect post 2021 squeeze that you had them using this tool over and over and over. And now, really this year, you're seeing it used to epic proportions. So to me, does it mean that someone's going belly up? Does it mean that someone's struggling? It could. And you see it here. This right column next to XRT is GMEU. They created up to 4.1 million, the most ever outstanding there, and now redeemed heavily down to 1.6. That is an extreme fluctuation, significant shorting. Typically in these times, and this is not financial advice, I could not be more clear about that. Typically in these environments, you're going to see a slingshot type effect back in the opposite direction of where they took price. You can infer where that might be this time. Now, what does that mean for the coming week? Well, we'll check the OCC dashboard to see how the call options are looking for next week. Again, this is not OPEX now, so that's better. But October 24th, you can see here for regular GME. Let's put up the GME one strike as well. Where did they build out the call wall? Well, 25, there's 6,900 calls. Okay. That's not a lot if you're having settlement volume, but it is the largest strike. So that would be kind of the area, I think, of a little resistance. But beyond that, there's not really a wall built. So if you're going to get settlement volume, if anyone's cleaning up legacy fails or anything that might or might not exist, let's not get into that today's video. I think that's when, you could have a better opportunity to see something. Again, not saying that there's going to be anything, but it would be, in my opinion, more likely to happen then than it would be on an OPEX. Of course, then you have October 31, expiry, the end of the month. There is a larger call wall at the 25 strikes there and upwards of, but not a lot higher than that. So it'll be a very interesting environment to see kind of how they treat these options expiries. And then quickly to look at November 7th, there's nothing built out on this one. So that to me probably has a little bit of a tell in it. Again, they can always roll these. So this week, the ones that are out of the money, people might roll those now to next Friday, and they might roll them again, so on and so forth until, GameStop, there might be a little bit of good price action. Then they could close out those trades. So we'll see if they did do that. We can get that data on Monday or Tuesday next week, take a look and reassess then. But looks like maybe the week ending November 7th, there's a little bit more intrigue, and maybe for a rebound, if there is some macro type dependent news, October 24th weekend looks a little bit better than this standard OPEX as well. So I hope that gives you guys at least where I'm thinking. I appreciate each and every one of you for watching, and leave me your thoughts in the comments too. Please leave a reply or a comment. Please leave a like as well, and I will talk to you guys again real soon.